Consumer debt hits 2.5 trillion and Chrystia Freeland has a new plan to make your life worse through inflation. And also the Bank of Canada on the back of this is saying that they might not cut as much as they once thought with interest rates. So first of all, cost of living, unemployment factors in record-breaking Canadian consumer debt. So a report came out from Equifax recently that highlights what's going on with consumer debt. So let's see what's going on, especially bankruptcies and delinquencies. So consumer debt rose to a record 2.5 trillion in the third quarter as many Canadians continue to struggle with high living costs and rising unemployment, new surveys from two credit bureaus say. Newcomers and consumers who borrowed money for the first time in the past 12 to 36 months saw the biggest rise in missed payments compared with the same consumer group last year, Equifax report published Tuesday showed. So basically what you're seeing is a lot of these people who are taking up credit now, well, guess what's happening to those people? They're actually defaulting on those payments. So that is a very, very bad sign of what's to come, which we all know on this channel as this debt bubble continues to implode. So recent newcomers to Canada are facing challenges in navigating the Canadian financial economy. That's one way of calling it. The Canadian debt bubble is another way. So historically, newcomers have demonstrated strong credit performance in the first few years of being in the country, said Rebecca Oakes, vice president of Equifax. However, rising unemployment levels combined with high inflation in the last few years has likely added significant financial pressure to this group, she added. The Bureau said that more than 1.3 million consumers missed a credit payment in the third quarter, up 10.6% from a year ago. So 1.3 million people are now defaulting on their credit payments in Canada. So again, where does that risk go? It goes to the banking system. Why can't the Bank of Canada see this? Financial institutions, they can't see this coming. Of course, they know what's really going on. It's just the reality is they don't want to compromise their profits in order to figure it out and buffer their cash reserves as much as they actually need to because they know the government's going to step in and cover it. So it also says, despite an elevated delinquency rate, Equifax said the pace of missed payments has begun to slow following recent interest rate cuts. Going to push back on that a little bit because interest rates have gone down and that is going to affect people with elevated debt levels. But one thing that they're not thinking about is whilst those interest rate cuts have come, well, guess what's happened to the unemployment rate? It's practically really done nothing over the past 5 months here. So we've seen the unemployment rate flat, and that's just a pause essentially after this steep climb. And we know these things don't go up in a straight line. So yes, the unemployment rate climbing has paused. We know unemployment is still there. It's just a majority, a lot of these people coming in. And we also know from David Rosenberg that loan officers are now getting less and less willing to lend to these groups. And if you look at the Business Outlook survey as well, we've been down in the dumps here now for nearly 2 years. And if you look at 2020, we didn't even get to these levels during the pandemic for so long. And then if you go back to the recession when commodities were hit really bad and Canada was nearly pulled into a recession, and then interest rate cuts from the Federal Reserve and the Bank of Canada managed to stave that away, you can see here that you had a prolonged period there. If you look at what happened in 2008, again, prolonged period. So we're going to be verging on the longest period of time that the Canadian Business Outlook survey indicator has remained negative in a long, long time coming up. So we'll continue to see. I mean, this only goes back, unfortunately, as far as 2003. And then Bank of Canada could rein in rate cuts amid tax relief checks, says TD Bank. I mean, we could only hope that they would do this, but I don't think they will, unfortunately. With the potential for millions of Canadians to see a bit of extra money in their pocket this spring from planned federal and provincial rebate checks, a new report is suggesting that added money could mean at least one less interest rate cut by the Bank of Canada in the next year. The report from TD Economics released Wednesday suggests the central bank will continue its rate cutting cycle, but with the planned checks, there may be less need for it to continue into 2025 at the same speed. The Bank of Canada has been cutting interest rates because they fear the economy is so weak that they need to provide extra stimulus through lower interest rates, even though it doesn't have that effect, James Orlando said at TD. But as the economy is stronger because the government's stepping in to provide stimulus of its own, then maybe the Bank of Canada doesn't need to cut rates as much as it otherwise would have. And that is one thing to note, because if you look at the government, obviously all this money that they're about to release, where's it coming from? Well, it's printed money, because the money is not there. Like, they don't have that money to spend, so they're borrowing that money. And as you guys know from watching this channel, anybody who borrows money is creating new money. They're creating new credit that goes into the system. Now, this can be destroyed, especially in the case of mortgages on bad loans, which we're seeing more and more bad loans and loan write-offs that are happening. So credit destruction has really increased. But the reality is the government coming in with these stimulus checks, it's directly inflationary. Whether we'll actually see that impact inflation and move the needle on inflation, I highly doubt it, and it's yet to be seen, but we'll see. And then Freeland is urging the provinces to follow Ottawa on tax holiday. The federal government is calling on the provinces to step up and drop their sales taxes on certain items in line with Ottawa's proposed 2-month relief period. But Finance Minister Chrystia Freeland won't confirm whether Ottawa will compensate the provinces with a harmonized sales tax, who are set to see a shortfall in planned revenue under the proposed tax holiday. And the funny thing about GST anyway is you're essentially paying tax twice. And I'm not sure many people realize this, but you're taxed on your income. And then guess what? When you go to buy something, you're then paying HST, PST, GST, or a combining of the two. You're paying that. So that's just an extra tax. And then you go to fill up with gas, and guess what? You're paying the carbon tax, which is also on the fuel, which is also on the tax included in the tax. So it's just tax on tax on tax and tax, which could take your marginal tax rate from like a 30% to a 60% without most people even realizing how much tax they're paying. So it's very interesting. And one thing that I found hilarious is we're trying to figure out what this means, Holt said, estimating the announcement will work out to about $62 million in lost revenue for New Brunswick. Holt said she is looking at the federal government to cover the whole, and Prince Edward Island Premier Dennis King has made similar statements. But again, like, where is this money coming from? So if the government is going to cover the shortfall, and they're all in deficits, so what does it really matter where it's coming from? But you just have to realize that this is new money that's introduced into the system. This new money will be inflationary money, even though we don't expect this to move the needle on inflation. It's like I said, this is just the beginning. If you think that this is the beginning and the end, I think you're being really naive, because look at what happened during the pandemic. When they started rolling out that stimulus, was it the beginning or was it the one and done? It was the beginning, and it went on for years, in fact, and the stimulus just got larger and larger and larger. And guess what? The economy is so weak in Canada, as we can see from things like the Business Outlook surveys, as we can see by the GDP per capita depression that we're in, and the recession, even though the mainstream media won't call it that. You know how bad things are getting right now. And the Bank of Canada, they don't know this or understand this, because they're just a government institution at the end of the day. They're funded by the government. They don't have a clue, really. The financial institutions, they know because they see the loan data, but they just don't care because they know the taxpayer is going to cover most of it, or at least they think the taxpayer is going to cover most of it. And that is partly the problem. You've now got debt at 2.5 trillion, so it's way higher than GDP. So just to put this into perspective, if you wanted to pay back all the debt debt, either public, household, or business debt in Canada, and you gathered all the dollars in the economy to pay it back, there wouldn't be enough. It's completely impossible. You can't pay it all back. I mean, that's how stupid it is. I mean, when you add up the public debt, the household debt, and the corporate debt, you're talking about 4 or 5 times GDP, the whole entire size of the economy. That's how big the Canadian credit bubble is, and I think people need to hear that. So anyway, if you've enjoyed this video, I'd highly recommend that you check out this video here, and if you're looking for a VPN and want to help support the channel, click this link here or go into the description, expressvpn.com/marketmania. This was streamed on ExpressVPN. I'll see you in the next one.